It's Tuesday, July 27th, 2021. Welcome to the Real Vision Daily Briefing, streaming live on YouTube, on Twitter, and of course on the Real Vision platform. I'm Ash Bennington, joined today by hedge fund telemetry's Tommy Thornton, one of our favorite guests here on the Real Vision Daily Briefing. Let's take a look at what's happening right now. There's been a lot of churn in the NASDAQ today. NASDAQ Composite, NASDAQ 100, both off by more than 1%. Apple, it looks like on the day, off about 1.5%. Final numbers on NASDAQ closing out the action at 14,660 on the day. That's off 1.21% on the day. The rout deepens in China. Tech stocks, we'll be talking about that today with Tommy. Also, part two with Cathie Wood and Kirill Sokolov live on the Real Vision platform for Real Vision subscribers right now. An excellent interview, one that I am very much enjoying. Tommy, welcome back. How have you been?
I've been great, Ash. Thanks for having me back. Boy, I always seem to show up on these Tuesdays that are really volatile, and we've got three big tech stocks reporting, and I see Microsoft, I think they're out because they're trading up just a tad. Yeah, it's exciting. A lot of stuff happening.
Tommy, you need to tip your agent for getting you on Real Vision Daily Briefing on the best days for market volatility. Give us a little bit of an overview for what you think has been happening on the NASDAQ. And I know that we've got some live reports today. Microsoft, Google, Apple all reporting today after the bell. I think Apple's at 4:30, Microsoft and Google either out now or out shortly. We'll be bringing those to you live as the numbers come in. But Tommy, what do you think overall on the action on the day? A little bit of a dip, maybe some anticipation on earnings. What are your thoughts there?
Well, we've seen this. We've had this market that has had a lot of divergences. And what I mean divergences, we've seen fewer new highs, we've seen fewer stocks above the 10-day moving average, 20-day moving average, 50-day moving average, but we're hitting new highs, and we're getting new highs because the mega cap tech names and consumer, Amazon, Facebook, they have done the heavy lifting, and it doesn't take a lot for them to move up a little bit and really accentuate the move in the NASDAQ and S&P. But I think it's interesting because we're starting to see some of these Chinese tech names really fall apart. And I'll tell you, I've had several trades with those, well, many over the years, but recently, over the last 6 months, I caught the top pretty well, covered, made a nice trade. I tried to buy in April, I think it was April or May, and I think I was on here telling everybody about it. I got stopped out, and the trend has been very persistent on the downside. And we talked about it a while back, how the Chinese government has really declared war on these mega cap tech names, consumer names in China, and they just have, the mandate to stamp them out. And they crushed the education stocks. I mean, crushed the education stocks. I wish I was short those, but wow, I mean, they are not stopping.
Said that education is no longer a for-profit industry in China. Jack yesterday said that Marxist-Leninism is back in China after all these years. I mean, that's a pretty big, that's basically an entire sector just got hammered by decree.
No, they didn't get hammered. It's dust. They were just destroyed. And so my view is, I look at a lot of technical stuff. I do have a couple starting to see some DeMark signals appear, not quite there enough for me to get involved. I don't want to be involved. I mean, EEM did have a DeMark buy 13, but you also have to remember the largest weights in there. You have Tencent, Alibaba, a few others. And if China's declared war on all these companies, and I really think it's a major crackdown, and I think it's going to last longer. There'll be bounces, but they're also doing this perhaps against the Western countries, maybe specifically the U.S., that we have a lot of assets in those stocks, and they could give, nothing. They don't care if we lose money in those stocks. And honestly, they have a mandate. They will fulfill that mandate. In the U.S. or in Europe, they talk about it, but they don't really do much. And I heard someone say today that this is really what the U.S. should be doing with the large mega cap stocks that we have here that have become so powerful. I don't think that's going to happen. I think there's going to be a version of that, but China does things with an iron fist, and the U.S. will sort of back into it and try and come up with a solution.
Yeah, that's a really interesting analysis, and definitely, I'm sure there are folks in the United States, particularly the critics of the major cap tech stocks, who wish they could do that. I suppose we should be very fortunate that we live in a country where that's not something that can be done by a ministry official.
Yeah, I don't want to have that in our life. I think there's regulation that's going to take place, and I think that's a good thing. If anything, it just puts speed bumps in front of all these mega cap companies to allow new companies to develop and grow and become something that they want to be. That they just get swallowed by these the technology gets swallowed by the big mega cap names. And another thing is, I don't see a lot of these big companies innovating as much as they have in the past. I mean, Apple's a great company. They innovate a ton of stuff, but my phone looks the same. Hopefully they have some further enhancements over the years. They need a new product. Maybe it's going to be a car. Who knows? But they need something new to keep this thing going. Now, just breaking news here. Microsoft is down almost 3%. AMD is down 2%. Starbucks is down 2%. And I previewed these earlier, or yesterday actually, earlier this week. It's a long week. It's Tuesday. The problem that I've found is these stocks in the NASDAQ, these big mega cap names. Phil Erlanger has a research company, Erlanger Research, and he tracks short interest, and he ranks stocks from type 1 through type 4. And I'll tell you, type 1 are stocks with heavy short interest with the potential for a short squeeze. Type 4 are those stocks with very little short interest, short ratio under a day. And what I've noticed is about 16% of the entire market is now a type 4 market. And that was the exact same percentage that we saw back in August, when after that big tech run, and we saw a big pullback. And that really was it for several of these companies. That they didn't see new highs for a while. So I think that we have a market right now. I mean, Microsoft earnings, I haven't looked at it, but I would bet that they're great. And they're just getting sold off because we've run out of buyers. There's exhaustion signals. Market sentiment is extreme. So it takes a lot to really move these things higher. I mean, even Tesla yesterday, they had, I mean, truth be told, a pretty decent earnings report. And the stock
let's talk a little
higher.
bit about that, because we were looking at those headline numbers, looked pretty good yesterday. We wanted to dig down into the internal dynamics. Looks like a fairly substantial percentage of that revenue is coming from automotive sales, which is what you would want to see rather than tax credits. I think only about 350 some odd million in tax credits and 10 billion in gross revenue from automotive sales at Tesla.
Right. I mean, they had GAAP earnings of over $1 billion, and that's a record for them. Congratulations. They still had, 350 billion or 350 million in emissions credits, which I think that will start to drop off in the next couple quarters, and that will be a less of a margin boost for them. It's partly because Stellantis, which is it's Renault, Peugeot, the Jeep, all the conglomerate, they are making more EVs, so they don't need to buy emissions credits from Tesla. And that's been that's been basically the entire profit over the last 8 quarters. They've bought more emissions credits or sold more emissions credits than net income. So,
Yeah.
So
a good sign to see that ramping up revenue from automotive. Tommy, to switch gears here a little bit, I know that you were looking at some of the things as I was prior to going on air today about some of the word coming out of CDC about additional recommendations for Delta variant for wearing masks. What are your thoughts there? What's the potential impact to the economy?
Well, we haven't seen any impact to the economy yet, and that's the main thing. We were getting these dribs and drabs of news saying that there may be a mandate nationally for everyone to wear a mask again. I'm not for that. I've been vaccinated. I think a lot of people like myself will be pissed and say, you know what, we've been vaccinated. We don't want to wear a mask. And if I'm forced to on an airplane or public transportation, fine, I'll do that. But I just don't want to see this turn into lockdowns and until people that are resistant to getting the vaccine, and that's their own choice. That's their choice. If they want to potentially get the COVID Delta, that's their choice. But I think it's going to spook the markets, much like in China back in Hong Kong when SARS would mysteriously come back after it was eradicated. And then we had that, we have another SARS outbreak, and, the markets would get hit. So I think we're going to have these nervous periods, and it's going to hit stocks. And I'm buying airlines, or I bought airlines recently. I sold my Carnival cruise just because, with a nice gain, actually, today. But I think it's going to be, these start and stops with COVID. I think that, I'm hopeful that, things get better in that regard. And in England and some other countries, the news is actually a little better that the case counts have dropped a little bit here and there. So maybe we're just behind them on that. So look, I'm not going to tell people to get vaccinated, but go get fucking vaccinated, okay? Because I don't want to sit home.
Very well said, Tommy. Very political. By the way, I should say
colorful language.
We were talking about mask mandates and on public transit. I actually goofed last week. I was fully vaccinated in May and have been out, wearing, going to restaurants and doing all the things that we're doing here in New York City, not wearing a mask. But apparently in New York City, the mask mandate remains on the subways and on buses. So on all public transit in New York City, masks are still required. So if you're here in New York City, wear a mask, as I, of course, will be on mass transit.
I rode the train from Greenwich to New York for the Real Vision Blacklist dinner with Milton Berg last week and 2 weeks ago. And yeah, I wore a mask. Fine, I'll do that.
Yeah.
But I don't want to be put through what we've had before. And I went out and got the vaccine. I did my part, and I hope
I got the vaccine the first moment I humanly could.
I got mine March 1st. March 1st, and that's when I was eligible. And don't ask me how. I got some sort of in at Walgreens. But I don't care. I got in. I got my vaccine. Everybody in my family's had it, and I'm happy everything's reopened. Let's not have it, close up again.
Yeah,
so
indeed.
Let's get out of this political debate. It's probably going to lose people here going, oh.
By the way, talking of which, shifting gears to one of our top stories, I wanted to take a look at a clip from an interview with Cathie Wood. This is Kirill Sokolov from 13D, interview with Cathie Wood. This one is obviously available on the Real Vision platform for Real Vision subscribers, available on the Essential tier. Let's just take a look at the clip, and we can chat a little bit about it in a second.
We are doing bottom-up stock research as intensively as anyone else. However, we don't do quarter by quarter. There's a lot of noise in innovation, but we listen to every quarterly call. Our projections are year by year, updated as quarters come out, and our time horizon is 5 years. Most other time horizons are much shorter. Now, when you look at the number of units of a new technology in the early days, the difference between if you're mapping out, let's say, a linear growth trend versus an exponential growth trend for a technology. In the early days, they don't look that different. The bases are too low. Give an analyst or a company 5 years, and it's night and day. That's why our electric vehicle forecast today for in 2025 is 40 million. Most others, if you look at all of the trade associations that forecast and so forth, you'll see maybe 5 or 10 million, not 40. It seems impossible. That is, again, another inefficiency we are exploiting because Wright's law works.
Well, there you have it. A kind of a philosophical analysis on how Cathie Wood thinks about the world, how she thinks about the world differently than many other folks who are running money right now. I thought it was fascinating. She looks on a quarter by quarter basis, obviously to look at news flow, but her time horizon looks more like 5 years. She's looking at the difference between exponential versus linear growth, which takes 5 years, and using electric vehicles, EVs, as a test case, I think is really interesting. I'm also fascinated by Wright's law, which I've just started reading about, which is about how costs decline as cumulative production increases, and it looks a bit like an exponential curve. So it's a really interesting thing to think about.
Yeah, it's great in theory that you have a 5-year time horizon on your investments. However, I'm not sure that the investors that have put their money into ARK funds are actually thinking the same way when they put money in earlier this year and they're down 20 to 25%. I like Cathie. I think she's really smart. I think she overhypes what she does a little too much, and I am actually short the ARK fund, and I think it's going to go down another 20%, and partly because I'm short Tesla, and I think that's going to go down a lot more.
Yeah, well, we're all about divergent views here at Real Vision. Which of the ARK ETFs are you short, and why specifically?
Well, it's a lot of it is technical. A lot of it, there's some that is about liquidity. I think there's going to be a liquidity problem for her, which we already saw earlier in the spring. She has very illiquid companies. These companies don't make money, and I just tweeted out something for everyone to see. Julian Brigden did a great chart that I got inspiration. I overlaid DeMark indicators, and it is basically the ARK fund and the Goldman Sachs unprofitable company basket, and it's really highly correlated. So look, I think they've had a great run. I think a lot of it has to do with Tesla, and I've said this before. Their analysis on Tesla, nothing actually happened that they predicted. Nothing. It's like they talked about the robo-taxis as this big thing, the self-driving. Those things they're not happening right now. They're not going to happen for years. But the stock ripped, and she hit her price target and then some. And I kind of look at it like you hit your golf ball off of a tree on a par 3, and it rolled onto the green and into the cup. So it wasn't the outcome was what you wanted, but it wasn't quite how you wanted to hit the ball. So it's I'm going to watch it. I think it'll be a really good interview, and maybe my mind on some things will change.
Well, that's what we're all about here, obviously, is being able to look at things from different perspectives, different angles. Cathie Wood interview now live on the Real Vision Essential tier, and this is fun, of course, to debate it. My guess is that Cathie would probably say that's the importance of a 5-year time horizon. As she pointed out, obviously things from quarter to quarter can move around on you, but her view is with the bigger picture. Tommy, how are we doing here looking at earnings? What do we see coming across the wire?
Okay, so Google, they print money. They can basically turn up their algorithm and do whatever they want. So they're up 3.5%. They were the only mega cap name last quarter to actually go up after their earnings and stay up. So they're up. AMD's up almost 2%. Right there. Let's see. Facebook's in sympathy is up 1.4%, but down is Starbucks, down 2.5%. And if you look at the move that Starbucks had into this number over the last week, it was pretty easy to see that it was going to be very tough for them to continue this. Microsoft is down 2.5%. You know, I would be willing to bet that they blew it out, but they tend to
But that's
sell
really
off.
interesting. We don't have the data, and we're looking for it here. It'll be here in just 1 second. But I'm curious about this precise point that you've just made. You see, your expectation is a beat on earnings and revenue, and yet you see the shares sinking. It looks like off a little less than 1% after hours, spot 87 down to 286.54. So what does that suggest to you, Tommy, when you see a beat on numbers, or you anticipate a beat on numbers, and you see the stock sell off?
Well, expectations as stocks go up I mean, look, if the stocks were down all last week and it was a 2-week decline, you'd probably see the stocks rally on this. But they just got above, too far above their short-term overbought. Again, one of the things, there weren't a lot of shorts involved, so you didn't have a squeeze. It's a very crowded, long, very obvious, very simple company to own. So maybe they just ran out of buyers here after hours. Maybe tomorrow there'll be something that, the Fed will say something nice and dovish, and the stocks will move a little higher. But the reaction tomorrow is going to be very, very important to see how all of these react after earnings. Now, it's 4:21. We have 9 minutes before Apple will post their numbers, and I anticipate those numbers to be very good as well. But I would not be shocked to see the stock pop and then drop, because they've done that before. So it's just, another thing that's happened that is interesting. Instead of shorts being involved, we've seen a huge amount of call buying, specifically in Microsoft over the last couple weeks. Apple, Starbucks had a lot recently, and that's almost a good tell of people buying calls at the highs, and they buy puts on the lows. So we track that through Erlanger's research as well.
Let's hit some questions, Tommy, coming in. First question comes to us from D-Vega D-Vol. D-Vega D-Vol, is that gamma? I think that's gamma, right?
Yeah.
Change in Vega relative to change in volatility. So the one here it is. One for Tommy. Does he feel the Chinese authorities are losing control? He said he's hearing, or she's hearing, their high yield market falling apart.
Yeah, that Evergrande story is really, really dangerous, because
for people who don't know, Tommy, give us the context on it.
Evergrande is like a conglomerate. It was almost built as like a bad bank instruments, or like a bad asset instruments, and there's just so much in there. And I mean, I don't know the exact. I mean, I'm not like an expert in this, but I've read, like, skimmed over stuff regarding this. But there's a lot of money that U.S. and European and other Asian countries that have lent to this business. So they have a huge amount of debt, and their CDS is blowing out. It's going, through the roof, where it looks like it's going to default. Now, will the government step in and bail them out? The thing that's interesting is, will they bail out the foreign investors, and how will that play into things? Yeah, the high yield market in China, there's a lot of debt in China. It's sort of the Wild West with debt in China. You don't know quite what you're investing in. So if this thing starts to blow, the Chinese government is going to have to make a big, decision. And I was talking with Julian Brigden. Speaking of Julian, he was thinking that there could be a dollar devaluation, a small one, like a la 2015 with what China did back then, which could really, that was a really spooky time back in August. Was it 15 or 16? I think it was 15. And that was a really spooky time. It hit all the U.S. markets, and it was a shock. And it really lasted almost 6 months until a really good, deep oversold condition in February of 16, which I will say that was one of the better buying opportunities in the last 10 years.
Yeah. Let's take a look at some other questions coming to us. Here's one from Evan. Tommy, I don't know if you're following this, but obviously there's a potential other debt ceiling crisis coming in. The question is basically, are there any thoughts that you have on the U.S. debt ceiling? Do you see a significant risk of a deal not going through? I guess being asked to handicap politics in the Congress.
Well, the Republicans aren't really in control here. They were in control with a Democratic president back in 2011 when there was a debt ceiling crisis, and they really were, making it difficult. And then, of course, we had, was it S&P or Moody's downgraded the U.S. and that caused a big dump. But it was also, you had a European crisis that was happening. But this is just kabuki theater. The debt ceiling. They'll raise it. They have to. They know that. They're just trying to be politicians and get something for their constituents and do something. It's a joke, honestly. I mean, how many times? Oh, we're hitting the debt ceiling. Oh, I'm so nervous because we're just going to raise it or we're going to extend it, and it's just kick the can down the road. It's a joke. That's just my feeling. I'm honest.
No, and we appreciate that, and that's one of the things that we want to do here, particularly when we talk about politics, is to separate out, as you say, the kabuki theater from the real material threats and risks. By the way, I don't think U.S. government debt ever got back to AAA, did it?
No.
We're still at AA plus, right?
No, I don't think that's going to happen. Especially after the last year that we've had, we've seen just such an increase in debt, and we'll see. But I don't think that's not a tail risk. I was short the bond market. No.
Yeah.
By the way, Google is now at 4%. Wow. They print money. God.
I'm seeing a headline cross the wire right now. Google advertising revenue rises 69% from last year, coming out of CNBC.
Yeah, everything rose after year over year. I mean, we were all locked up in cages. I mean, that's the bottom line. And everything was shut down, and we've reopened. This could be the peak quarter for the reopening. Maybe we're going to start to see margin pressures kick in. That's something that I've been talking about, where we might be getting to the peak and the other side of the mountain, and that's going to be normalcy, and that's going to be something that could be a third quarter earnings event. And that would remind me of in 2000, we had such a big run into 2000. We had a messy spring, started to come back in the summer, and then all of a sudden everything sort of fell apart when Nortel and Apple and Dell and Microsoft and Intel and everybody else had such high expectations they had to guide down, and that really was a shock. Add in the presidential election mess, and it was a difficult time. But I think that could be the time, third quarter, when we start to see earnings moderate and that growth start to top out. And the stocks will react probably before that.
Tommy, let me ask you this. As we talk about what that moderation effect looks like, what the normalization looks like, obviously this has been the steepest V-shaped recession and then V-shaped recovery that we've ever seen. What happens on the other side of the mountain? What does the other side of the mountain look like? Is it a gradual sort of wind down to normalization? Is there another cliff face as the residual buying or the backlash buying rolls off? I mean, how do we get some insight to that? How do you even begin to think about that question?
We're probably going to have the Fed in the next couple months, maybe at the Jackson Hole, mention that or give their schedule for tapering. I think the market's going to they'll get a little spooked, and then they'll recover, and they'll start to get used to it. But they may be too late right now. They may have should have started at this time, at the peak of the recovery. Here comes Apple. And that is something that I think it's just earnings moderation. You've had really, really strong earnings despite the pandemic. You've had tons of liquidity in the market. And will that continue? It's very hard to continue this type of growth, especially if you start to see tapering, especially if the stimulus money starts to top out. I mean, I don't know what they're going to do with the Apple blew out.
So what do you see? What do you see crossing the wire?
81 billion, 81.4 versus estimates of 73.8 on revs. When you think about how much they make every single day, it's just obscene. It is obscene, but incredible. And see, I don't see it on the up or down. Hold on.
How'd they do on the bottom line?
Oh, it's up 1% right now. It's up 1%. So there you go. Apple's up 1%. They blow it out and you get 1%. See, that's what happens when stocks get, they run up into their earnings and you run out of buyers. I mean, that is just an outstanding quarter. It's almost flat now. It's almost down. Wow. Yeah.
Well, there was exactly what we were just talking about, what you suggested before, blowout quarter and not a response from markets, signaling some sort of exhaustion, running out of buyers.
Yeah, and we watched this. This happened in April as well, and through May, and then they go down, and then we find some sort of bottom, and the dip buyers come back in, and there you go, happens again.
Yeah. So we wanted to run a little bit long today to cover this news, and there it is. Tommy, as you think about the week ahead, what are your thoughts? What are you going to be looking for, and what are you watching?
Well, we have this, first of all, we're peaking in earnings this week. This is the big week of earnings. We have GDP this week. We've got the Fed tomorrow. I think that it's a matter of, getting through earnings, seeing how the reaction to earnings is, how, if we can continue this run. I mean, the last 5 days or 6 days have been extraordinary, and I just want to see if they can continue that. And if they don't, I think then we may have some seasonality kick in August and September, and we could see some moderation in the moves in the market. So I think it could be a very boring August. I say that. I also thought this year would be kind of boring, but wrong. August, it typically is where people go away. They take time off, and I won't be, but I'm a little bitter about that. But we'll see. I think it's going to slow down. I think the trading's going to slow down, and let's just see how far down we go. Look, we've seen a lot of exhaustion signals on the daily, and we've seen pullbacks between 3 and 7% over the last year. We've seen we might have seen a couple larger in some other indices, but that's all you've been getting. But they work, and you can buy dips on those. It's just that one time where you buy that dip and it continues lower. So I'm watching for that. It may be happening in the next couple months, and just again, the breadth of the market doesn't look great, and with some of the other indicators I mentioned. So I think it's going to be hopefully boring in August. I've got a lot of other work to do, doing stuff behind the scenes here. So I'm hoping it kind of calms down. Yeah, I've said that, but it's never calm. You know that, Ash?
I was just thinking when you were saying at the very beginning about how this could be peak, it reminds me of the old Jack Nicholson movie from the 1990s where he turns to Helen Hunt. He's playing this depressive writer, and he says, "What if this is as good as it gets?"
Yeah, maybe it is as good as it gets. I love Jack Nicholson. He's one of my favorites. I lived near him growing up in LA, and absolutely the coolest cat by far I've ever seen and met, and just awesome.
I don't think we can end it better than Jack Nicholson, can we?
No, I think it's as good as it gets.
It's as good as it gets. Ending. Except until you come back next following Tuesday from Next. Tommy, we always enjoy having you on the show.
One more thing. Tony Greer, he's gone in Italy, and I'm watching him on Instagram with his whole family and their beautiful family. They're in Italy. They're eating all this food. So, Tony, if you see this, go to hell. God, so angry. Why do you do that, Tony? We're friends.
Tommy, enjoy the rest of your vacation. We'll be here when you get back. Tommy, thanks so much for joining us.
See ya.
Thanks for watching, everyone.